Hey, what's up guys? John here. America now has more credit card debt than ever before in U.S. history. Over $1 trillion reported credit card debt.
$1 trillion in credit card debt.
Credit card debt in the U.S. has reached a staggering record high, topping $1 trillion for the first time.
Now, some other sources are saying it's closer to $1.2 trillion. But the more you look into this, the more we have to really see what's going to happen next. Now, I believe directly that this is correlated to crime in very big cities. Sure, there's very big policy problems in places like San Francisco, Los Angeles, Atlanta, Philly. As this credit card debt continues to skyrocket, inflation continues to get worse, you're going to see a whole new different type of criminal that's going to start coming out. This type of criminal is going to be one that doesn't have access to credit, they can't afford to live. And they're going to go out there committing these crimes based on they have nothing to lose. And I think we're going to start seeing a lot more of these criminals. And I think this is going to start happening as banks continue to tighten up lending standards, because they're going to start seeing more and more defaults, because Americans simply aren't going to be able to make bills on their auto loans, on their home mortgage payments, on their credit cards. Everything's going to get more and more expensive. Inflation is going to continue to get worse. And so smart and savvy people are looking at this and they're planning in advance. I'm going to share with you what's going on behind the scenes so you can do just that. Please hit the like button. When you hit the like button, YouTube will share this content to educate more people about what's really going on. If you want to fix your credit, you want to position yourself for the greatest wealth transfer of all time, you want to get funding when most people can't, you're going to need good credit. If you have late payments, medical bills, charge-offs, foreclosures, repossessions, any of these problems, reach out to us. We'd love to give you a free consultation at greatcreditfast.com. Take a look at this. So American credit card balance or debt hits $1 trillion. For context, 2013, coming out of the great financial crisis, it was about $660 billion, right? So we went from $660 billion. Many people are saying we'll never go back to that 2008 type of crash. Consumers were in way better shape in 2008 than they are today. So $660 billion, now we're at $1 trillion, right? $1 trillion. And put this in a context, credit card balances increased $45 billion from $986 billion in Q1 2023 to a series high of $1 trillion, $30 billion in Q2 2023, marking a 4.6% quarterly increase. Credit card accounts expanded by 5.48 million to 578 million accounts. So 330 million Americans, 205 million are over the age of 18, right? So this is basically 2.5 credit cards for every single person. So you're starting to see more and more people desperate for credit. Mortgage balances were largely unchanged the previous quarter, stood at $12 trillion at the end of June, in large part due to declining mortgage originations and slowing home prices, which obviously are directly in relation to these high interest rates and these high home values. But look at what's going on here. So more rate hikes likely needed to bring down inflation. So here's where consumers are, and here's what you should be doing. Now, they said credit card interest rates were 20.68% in May. Right? 20.68% in May. Now it's 23.99% in August. Right? This is median. The median credit card balance, median credit card interest rate, 23.99%. So it went from 20% to 23%. Basically 4% jump, 3% jump. But in 2008, during the great financial crisis, interest rates were around 11.8, 11.9, 12, and it was about 12%, give or take somewhere around that 12% range for credit card interest rates. And so to put this into context, today's consumer, they have an average balance of $5,733. And so when you're looking at that $5,733 at a 12% interest rate, looking back at 2008 during that great financial crisis, they would pay back basically 50% of this balance in interest, $2,243. Now at this 23% interest rate, 23.99% interest rate, would you think that that balance is going to be $2,200? Let's see. No, it'd be $27,000. $27,000. So going from this 12% interest rate, to the 23.99%, 12% interest rate, $2,243.86 to 23.99%, takes it from $2,243 to $27,000, basically 10x's the debt, right? So when you're looking at where consumers are right now, they're paying these 23, 24, 25% interest rates on their credit cards, and the Fed continues to increase interest rates, the interest rate is going to make obviously a lot more cost and expense on for the consumer. And so you're going to start seeing consumers looking at this and doing the math, saying, you know what, I owe 10 grand and I'm making the minimum payments. I'm paying $200 a month, realizing that it might take them 30, 40 years to get out of credit card debt. And you're going to start seeing people say, you know what, screw that. I'm not paying it. and they're going to start defaulting, right? And so I think it's all going to be correlated. You're going to start seeing banks taking massive losses on credit cards, on auto loans. I mean, the average auto loan in America right now is $716 a month. 1 in 6 Americans has a credit card auto loan over $1,000 a month. Credit card interest rates are at all-time highs. I mean, car insurance rates are through the roof. Gas prices are through the roof. That's what we're going to start seeing. Unless consumers somehow come up with tons and tons of money, we're going to start seeing massive defaults. And point blank, that's what I think is going to happen in the next 6 to 12 months as they continue to increase interest rates. So if you do have credit card debt, you should be looking into these cards. Now, I know there's going to be people in the comment section saying, John, you're telling people to get into credit card debt. No, I'm telling people if they have 20 or 25% interest and that they're paying on their credit cards, going from paying 20, 25, or even 30% interest to paying 0% is smart. It's not smart, it's common sense, right? Who would want to spend 25% interest paying somebody else? Back in the 80s in New York, paying loan sharks 10, 12% to borrow money. Now it's, it's a multiple of that. So if you can get approved for some of these cards, you should definitely do that. You should definitely look into some of these 0% interest cards. You're going to need good credit to do it, though. 700 to 749. The average credit score in America is a 698, so you're going to need better than average credit score. But you're going to want to be on the high side of this, because if you're applying for these cards and you get denied, it's an inquiry on your credit, which might drop your score, 5 points, maybe 10 points max. So you want to apply for cards and make sure you're going to be able to get approved for them, and you're going to want to make sure you're going to get a limit that's going to really make a difference in your life. You don't want to get approved for this card and then them say, okay, you get approved for $500 or $1,000. What is that going to do? Basically nothing. So you're going to position yourself for these cards, but a lot of these are for like 18, 21 months, 24 months. So some of these are really, really, really good circumstances and situations people should be looking into. Now, I believe that these offers are going to be gone in the next, very, very near future. They're going to be gone because banks are going to start suffering massive losses, and they're going to say, sure, our whole game plan with these cards is 0% for 12 months or 24 months. People are going to start accumulating huge balances. They're not going to be able to pay it off in time, and then we're going to be able to get a paying customer at that time. And most of the time, they're right. Most of the time, that does happen. But they're going to say, you know what? Those types of customers, we don't want them, because they're high risk and we don't know what their situation is going to look like in a year or 2 years. And so they're going to start pulling these offers. So mark my words, you're going to start seeing these 0% offers starting to fade away. And so as they begin to fade away, it's just going to make things much harder. So I do believe we're in the greatest wealth transfer of all time. I think that if you are somebody that wants to get ahead, paying attention to the fundamentals, looking at where consumers stand with credit card, auto loans, mortgages, looking at the layoffs, looking at everything that's actually happening, you're going to be able to make an opinion based on fact. Like, you're going to be able to come up with your own opinion based on what's actually happening in the world, which is a struggling consumer, a changing environment, higher interest rates, more defaults, more opportunity for the smart and savvy. That's what's happening. We're in the greatest wealth transfer of all time. I've been talking about it now. Ray Dalio is coming out saying it as well. You have all these different people that are coming out saying this is going to be a huge wealth transfer and that we are stepping into a really big problem. And that's what's happening. But I think you're going to see some really, really, really big winners here that are planning in advance, that are looking at this saying, you know what, maybe you're the type of person that says, I like to put things off until the very end and then I'll try to figure it out then. You don't want to do that. You definitely do not want to do that, because at the very end, it might be like a fire in a movie theater where everyone's trying to rush for the exit and not everyone's going to be able to get out, right? So you want to plan in advance. You want to have good credit. You want to have a really good game plan. If you're renting right now, you're wasting all your money in rent, maybe talking to a mortgage lender right now saying, you know what, my goal is to buy a house. This is my income. This is my savings. This is my credit. And they'll be able to tell you. They'll be able to give you a game plan and say, you know what, this is where your credit score needs to be. This is how much cash you need. This is what you need to do for your income. And they'll be able to help you for free. They'll tell you what you need to do in advance for free. And then just reverse engineer that plan and say, okay, this is how much I need to save every month. This is what I need to do. And then when everyone else is struggling, you'll be able to say, okay, I'm going to go from being a renter to now owning a duplex or a fourplex. I'm going to have cash flow coming in that's going to offset my expenses. I'm going to have an online business. And, you just start reverse engineering it. And then as everyone else is starting to contract and get a little bit more scared, you're expanding. Your wealth is growing. That's what smart and savvy people are doing right now. This situation, I'm telling you, is going to get worse. Credit card debt is only going to continue to get worse in the short term until this tsunami of default starts to come. What do you think about this entire situation? Do you think we're stepping into a massive, massive problem in America? Do you think inflation is going to continue to get much, much worse? I do. I think inflation is going to get much, much worse, especially when you start looking at a lot of the new policies that are coming in. There's no other way around it. There's no other way around it. And automation is coming right around the corner. Next 3 to 5 years, it's going to be a really, really, really big game changer for the U.S. Consumer. We're going to see wages continue to fall. But again, as I mentioned, huge wealth transfer, huge opportunity for the smart and savvy that are taking advantage of what's actually happening in the world. If you need help fixing your credit, you want to position yourself for success, we'd love to give you a free strategy session at my company, GreatCreditFast.com. That's GreatCreditFast.com. Go there, schedule a free strategy session. We can see how we can help you, position you for this great wealth transfer at GreatCreditFast.com. See you guys next video.